Welcome to the free course on option trading. In this video, I'm going to spend some time going over many different concepts about option trading and take you from a beginner to an intermediate option trader that can make $10,000 or more per month. In this full course, I'm actually going to be not only teaching you, but going step by step through the journey that I had and giving you the blueprint to having a similar journey to make multiple millions of dollars. Just like my portfolio on screen, I have a $1.8 million portfolio. And although this year wasn't that good at just 25%, I've had previous years that were at 50% and even 700% when I was growing a smaller portfolio. It is much easier to grow a small portfolio than a big portfolio. And I do have the blueprint for growing a small, medium, and big portfolio. So we're gonna talk about all three of those, as well as strategies. I'm going to go over call options, put options, the wheel strategy, the poor man's covered call, selling puts, buying puts, spreads, credit spreads, debit spreads. I'm going to be giving you all the secrets to managing different strategies. So I do have some notes in front of me. We are going to spend some time going over some ETFs that I personally like, some stocks that I would personally pick for using options. Those stocks will include Tesla, Palantir, SoFi, Apple, Amazon, Microsoft, Google, and many, many more. I'll be using Robinhood personally. I do have a couple of brokerage accounts, and brokerage accounts don't matter. I'm just giving you the tools, the education, and the knowledge to actually make money and do this for yourself. And hopefully make this a full-time career like I have, so you can travel the world, have more freedom, and live the life that you deserve without having a 9-to-5 or a boss. So let's first of all talk about small accounts. I am not personally biased to a small account, a medium, or a large account. Everyone has to start somewhere. I personally started with $2,000, and when I was going to Drexel University, and I also had some time at University of Pennsylvania, when I was going to college, I had some internships. The internship that I had first was working on Wall Street on the New York Stock Exchange. This was for a hedge fund that was trading options. I was sitting there next to other option traders. There was 4 option traders, and they were making between negative $5,000. Some of the bad ones were losing money, and other ones were making upwards of $50,000 per day. So I got to see what a good option trader looks like, what a bad one looks like, what the market does, what brokers do, and I got to learn a lot about the inside secrets of Wall Street. That was just one of my careers. So look, the secret to growing a small account is starting small. It's really hard to diversify a small account. So therefore, you will have to use more buying strategies. When you don't have a lot of money, you're gonna wanna use call options. A call option is a position that lets you benefit when a stock goes up. That's all it is. It's a bet that the stock will rise. A call option makes money as the stock goes up. So let me show you an example right now. If I were to buy a call option, let's say that I think Apple will go up. Apple is really a good bet because Apple is such a huge company with a great brand. So I'm going to go trade Apple options. Now, if I'm going to go buy a call option, you will see that I do have to spend some money. So for example, here, if I buy a call option at 197.5, I have to spend about $105 or $105. This is amazing because I get to spend a very little amount of money and I get to benefit as if I had 100 shares, but I don't. I don't have to buy 100 shares when I buy a call option. Now, buying a call option is not something that I personally do on a day-to-day basis. It is one of the best beginner strategies, and it's phenomenal for making a lot of money. However, as you will learn in this free course, my method of making money is more safe, passive, and consistent. And there is nothing consistent about a buying strategy. That's because you're making a bet for something to happen. Instead, in my personal philosophy, and after working at Goldman Sachs, what I have learned is that selling options is much more favorable than buying options. That doesn't mean that you shouldn't buy options. Again, if you have a smaller portfolio, you basically have to buy options. However, there are better ways to buying options than just buying a call option. But let me quickly show you what buying a call option looks like. When you put up money to buy a call option, you are betting on it rising. Now, you needed to go to the strike price of 197.5 because that's the strike price that you're buying. However, you've also paid about $1. That's why your actual break even is going to be $198.54. So you actually need the stock to rise by a little bit more than the strike price. However, to break even, you only need the stock to go up by 1.43%. So in 5 days, if Apple goes up by, say 2%, you're actually going to make pretty good money. If Apple were to go up by $5, then you would make $200. That would be the price of the stock minus your break even of $198.54. So the difference there would be about $1.46. And because we're buying this at $1.05, you would actually more than double your money even if Apple only moved up a couple percentage points. That is the power of options. You can literally double your money in a very short amount of time. In just 5 days, you can make 2x on your money. In fact, you can even make 10x on your money in a month or 2 weeks. It just depends on how much the stock moves. And that's the beautiful thing about options. You can put up very little amounts of money and get very big returns. Now, this is what most people do, and it ends up being okay for some time, but also it could potentially blow up your account. So you need to be very wise when you're buying options and use proper risk management. Now, most people don't teach what risk management is. Most YouTube videos, in fact, YouTubers don't even know what they're talking about. They just sound like they know what they're talking about, but they don't actually have experience like I do or a degree to back up their claims. So let me tell you, the most important thing is risk management. You can be right about a stock. You can make, in fact, you can go from $2,000 to $20,000 to $200,000 to $2 million. And if you're not using risk management, you can take that $2 million and lose all of it and go way back down to zero, which would emotionally crush you and it would be really devastating. So you need to understand that you always want to have no more than 10% of your money in any single position. However, if you think about it, I personally have more than 10% of my money in certain positions. For me, I have a lot in Apple. And that's because when I believe in something and I believe that that stock, that company is going to be, a long-term play, then I will invest my time, my energy to be in that company beyond the 10%. And for me, Apple, Amazon, all these good positive companies like the tech companies, the big blue chip companies that have a good brand, these companies are okay to break rules. But for option trading, if you're just going to buy a call option, it's even better to go to 5% per position. So if you have $2,000, then 5% would be a $100 bet. That way, if the option doesn't go in your favor, you will lose just $100, but you're not going to lose your entire portfolio. And that's where most people go wrong, is they invest way too much. Now, what is the better strategy to just buying call options? Well, that is going to be a poor man's covered call. We are starting off again with smaller portfolios. And as we continue this course, we're going to talk about medium portfolios and large portfolios. And let me tell you, if you're starting with a small portfolio, I love that you are devoted to this journey. And it does take time. You are going to have to take some time to grow your portfolio. And it is a function of two things. I've always said on this channel many times, I'm very transparent. I show everything. In fact, if I go to my account, you can see right now that, I can even show you my history. I can go to my history. I can show you my tax returns. I've done that many, many times. That's because I'm not looking to hide anything. I just want to transparently show you what I am personally doing, what's worked for me, and I'm doing this because it's my passion. So if we look at some of my history, we can obviously go on for a very, very long time. But when you have a small portfolio, it is really important to manage your money the same way as it's $2 million. So when you have $2,000, you really have to focus on it. But also, let me tell you that you also need to add money to your portfolio. Growing your wealth, I did not grow $2,000 into basically $2 million without adding any money. I have added some money. The majority of my wealth here in this portfolio was built through returns, but I did add about $400,000. So I'm just being transparent and honest that I have added money as I was making money in my internships. Now I wasn't making a lot of money, and I added most of that $400,000 just very, very recently as I became a coach and a YouTuber. You need to understand that you need two things. You need to keep adding money to your portfolio, and I don't care. It could be $500 a month. It could be $200 a month. You want to set up a consistent plan, and then you want to use consistent strategies. So again, we talked about buying call options. Let's talk about a poor man's covered call. A poor man's covered call is amazing. Let's just say that we want to invest in Adobe stock. Let's just say that we want to invest in Chipotle stock. Chipotle is an expensive company. And if you were to buy 100 shares, that would be over $200,000. Basically, it's like buying a Lamborghini. Now, I know most people don't just have $200,000 laying around. Heck, I don't even think I have that laying around in cash. So what you can do instead is you can invest in any company using a lot less money. However, you can also make some money even buying options. So here's what it would look like. You would also buy a call option just like I just showed you. However, instead of just buying a call option and betting on it doing something in the short term, you would buy a longer term call option. This would be called a LEAP, a long dated option with a long-term expiration date. A LEAP is just an option that's expiring in 1 year. That's what textbook definition is. For me, it's just 6 months or greater. So let's take a look at, for example, January 17. This is about 1 year away. So that is good. Now, what I would do is, yes, this can be a fairly expensive strategy, but again, I'm just using Chipotle to show you how expensive Chipotle is if you were to buy 100 shares versus just doing a poor man's covered call, which granted, this would still be really expensive. I can show you another example, but let's just go over Chipotle just to show you how big of a difference it really is. So here, you can just buy a call option. So let's say I'm gonna buy the 2100. That's going out 1 year. Already you can see that, yes, it's a lot of money. It's $40,000. However, you would have to put up $220,000. So this is literally 1/5 of the price. Now, how a poor man's covered call works is you would sell a shorter term expiration. So let's just say I'm going to sell January 19 or roughly 1 month out. If you're watching this in the future, the logic is the same. This is a course that's meant to test time, and however many views it has, I expect this to continue getting views because I want it to be the best course. So please, if you will like this video, I would be so appreciative. And if you subscribe, I promise I will make you a consistent option trader. Yeah, so now what we can do is we can go to sell. And for example, I can sell something that's really close to the money. So let's sell the 2300. Now you will see that I'm actually able to make about $2,300 or $3,000 in premium. So I'm collecting $3,000, but I can make a lot more. I can make more because this option can still increase in value. But the long story short here is that you can actually collect income on a call option. Now I get that this is a very expensive position, so let's just go to something a lot cheaper. So let's go to PayPal. So I'm going to show you an example on PayPal by also opening up a poor man's covered call. So again, a poor man's covered call would start out with a leap option. So I'm going to go out to, let's just say July 19, which is 222 days out, and I'm going to buy a 50 call. So of course, this is much more affordable. It's only $1,300. And now you can still sell something shorter term. So let's just say I sell something out into February, which is basically, this is a covered call. A poor man's covered call is very similar to a covered call, except you don't have to own 100 shares. That's what makes it so amazing. It's such a cheap strategy. So here you can see how I'm collecting $224. This position is great because now I'm only putting up about $883 in premium. I am collecting roughly $224. And sorry, I'm not actually sure why this max loss says 883. We're actually, in fact, putting up $1,146. And I know that because I've been doing this for 10 years. So I can see that this is some type of mistake. I'm not sure why Robinhood got this incorrect, but it is in fact incorrect because when you're putting up $1,370 and I'm collecting $224, this would be the difference that you have to put up. So a little bit over $1,000. And on a little over $1,000, you're basically collecting $200, which is like a 20% return. So I'm literally making a 20% return in a couple of months, and I can actually make a lot more. So if PayPal rises, you can see how the chart here shows that if PayPal rises towards the 65 strike, I can actually make $600. That's a 60% return in roughly 60 days or 1% per day. Absolutely insane. But of course, you do have to be right on direction. So with option trading, when I used to work for the first hedge fund, I was actually talking with a professional trader, and he was telling me that basically options are safer than stocks. And I was like, no way. No way. There's no way that options can be safer than stocks. But as I learned more about options, I realized that you are in full control. You can actually bet like a casino, like you're playing blackjack, and try to double and triple and quadruple your money very quickly and easily, but at the expense of really huge risk. Or you can also use options as a retirement strategy where you just make 1% a week, which is what I do. Make it super safe, make it super consistent. And yeah, it's not going to be very volatile. It's not going to make you overnight rich, but it's going to be really consistent and provide that passive income for you to actually leave your job and travel. That's why I've been to so many countries, is I have that time freedom, location freedom, and high income. So that all comes from option trading. And of course, having this YouTube channel has helped a lot. But originally, I became a millionaire through option trading. So with that being said, one of the biggest mistakes that you can make is really rush your journey. You can't rush your journey. For me, it took many years. It actually took almost 10 years to get to this point. I retired 2 years ago where I could have just traveled full time and didn't really have to work. I continued to work, continue to invest because I like it, I enjoy it, it's a passion, I don't know what else to do. So now I'm at the 10-year mark and I'm well beyond retirement where I can just go to a country and absolutely do nothing if I wish besides sell options. Now again, if you're working with a small portfolio, buying options is kind of crucial. But I will say that as we get on later in this course, you will see that I will give you the ultimate guide to spread trading. And now spread trading will actually give you all the insights and knowledge to basically use a very small account to make consistent income. Now, you're not going to retire on that, but you're going to make enough to pay some bills. You're going to make enough to go out for dinners. And even if you have a few $1,000s, that's fantastic. Now, as you will also learn later on, as you scale your portfolio, you want to get away from spreads and you want to just stick to the simple strategies of covered calls and selling puts and the wheel strategy. And the wheel strategy is just covered calls and selling puts. You will know all about this very shortly. So what would I do and what would I avoid to actually get to the 7-figure mark? Wherever you are in your journey, do not rush and focus on high quality companies. So for me, I mentioned that we're going to talk about some ETFs. SPY is an ETF that basically has all of the holdings within it. It has 500 companies. It has all of the best companies. It has Johnson & Johnson, it has ExxonMobil. In fact, we can take a look at SPY here because this is one of the best ETFs that you should really be invested in. You don't have to be a stock picker. You don't have to find the next trend. You don't have to watch CNBC. You don't have to really watch any news, and I'm not biased towards CNBC. I'm just saying you don't have to watch any news in general. You can just invest in some top quality companies. Use the simple strategies that I'm going to discuss, like the covered call, the sell put, the poor man's covered call, and later on we'll talk about spreads. And that way you will grow your wealth and you can have it on autopilot mode. Many of my students are really excited the first 3 to 6 months until they realize how simple, easy, and automated option trading can be. Once you can set some positions, you don't actually have to do too much if you set them correctly. Now, let me just talk about the S&P 500, okay? The S&P 500 is composed of many different sectors, okay? One of them being technology, financial services, communications, consumer defensive, real estate, industrials, healthcare. Rather than having to become an expert and become a stock picker, you can just invest in the S&P 500 and you can get some really good returns. In fact, for some people, I would just say you can put all your money in the S&P. The main goal that I've always had is to make $300 to $500 per day. And I was never concerned with becoming a super fast millionaire or anything like that. Yes, I wanted to become a millionaire for a very long time, but I always focus on consistency because I'd rather make, in 1 month, 2,000, the next month, 2,100, 2,200, 2,300, and so on and so forth, than having 1 month that's $8,000 and the next month I lose $3,000. For me, it's really all about consistency because if I can depend on that, then I can actually, have full freedom. Now, the covered call strategy is also fantastic because let's say that you have 100 shares. Let's say that you're not even interested in option trading. Well, the covered call strategy is still going to be something that you want to use even if you're not an option trader. So many people that just hold stocks in their Roth IRA, their 401k, or just have some inheritance. Let's say that you inherited IBM stock. I used to work there. So if you have 500 shares of, let's say, IBM stock, so let's just go to IBM, I'll show you how you can actually make income with the covered call strategy. So you can still invest in really high quality companies and then use covered calls to basically generate income and get paid for stocks that you already hold. So that's what I really like about options is they make your stocks work harder for you. They make your stocks actually produce income. So here IBM's at 161. I'm actually surprised the stock went up quite a lot. It did pretty good actually in the past 1 year of just 10%. I guess that's not too crazy. So let's just say you have 100 shares here. So what you would do is you would do a covered call. So if you have 100 shares, you would go to sell, call, and then you would just sell a call option that's way far into the future. That means you don't really have to do anything. You can just hang out, relax, and your stock will not only go up, but you'll also get the upfront cash of selling a covered call option. So for example, if you have IBM, you can go ahead and sell the 170. So let's go to sell, call, 170. Now granted, this is not a lot of money, but it's $400 that's basically free. You collect $400 right now today as soon as you sell this covered call. And if IBM goes past 170, you will have to lose your stock. However, that's not that much of a problem because if you're okay losing IBM at 170, then it's not really that much of an issue. Then you're happy making a pretty good return of $8. The current price is 162 roughly. It's an $8 return plus another $4. So you would make $1,200 doing nothing for 131 days. That actually adds up to being about $10 a day or like $9.85 or something like that. Okay, so you can basically make $10 a day doing absolutely nothing with $16,000. Now, I don't know about you, but that's like 2 cups of coffee right there. Now, I want to talk about how to plan your wealth and how to actually grow your portfolio visually and financially. All All right guys, so in this part of the video right now, I want to show you what my net worth calculation sheet looks like and how I personally built my wealth and how you should plan. So check this out. If you're starting off with, let's just say $30,000. So you're starting off with $30,000 and let's just say you can make 35% returns per year, which is pretty high. I will admit it's pretty high, but definitely possible, especially with a smaller portfolio. As you can tell though, as you go far into the future, it does become harder to make 35% over and over again because, well, even Warren Buffett can't do that. Now, let's talk about the savings rate. So everyone in the Western world, because most people that I work with are from the United States, some Canadians, you should be able to at least put away $1,000 per month. So let's just put $12,000 because this is the yearly savings rate. Well, let's just focus on the first 10 years. Basically, if you have $30,000 and you can put away $1,000 per month and your return is 35%, then in 10 years, you will become a millionaire. And if you think about it, most people never become millionaires. They're just on that rat race, on that wheel where they go to work, they get a raise, then their life expenses go up, and inflation goes up and everything else goes up. So even if you're making like 90,000 and then you make like 95,000, 100,000, 105,000, 115,000, it's like, doesn't really matter because $115,000 in a major city is not really going that far, especially after taxes. So what used to be six figures now does not feel like six figures. And my new number for what six figures feel like 15 years ago is $250,000. So most people, unless you're a software engineer, doctor, business owner, which I work with plenty of those types of people, don't make that. So what you need to do is to make up that income to get to $250,000. Or of course, if you're going to travel like me, or if you go to a cheaper part of the country of United States, then you can obviously get by with a lot less, especially if you own your own home. But check it out. I have a plan for you. In the next 10 years, if you're smart and you actually focus, and you take action, and you commit yourself to option trading, and you don't look left and right, that's my right, this is my left. If you don't do that, then you will be on the right track to becoming a millionaire and financially free. If you look to the right and, oh, what's going on with Shopify, Amazon stores, and oh, this advertisement that I've seen talks about crypto investing and automated returns and this, that, and the third, okay? Don't trust that stuff. Just focus on your career, your active income, and then investing, okay? If you do just those two things, you don't really need anything else. Yes, you can have a side hustle. Side hustles are good because look, if I add, instead of 12,000, if I make it 15,000, you'll see that the difference is actually really, really big. So it's 1.25 million instead of 1,089,000. So it's over $100,000. This $3,000 per year makes a really huge difference. So as you can see, the way that finances work and how your wealth works is compound interest. And that's why the first 25 years of my life were just really difficult, where my parents didn't have like air conditioning or heater. It was like super hot in the summer and super cold. And I would eat really basic food like just eggs and bread. And then I had the same clothes for gosh knows how long. I'm actually kind of embarrassed to say this, but I used to have to like kind of take clothes without paying for it because didn't have any money. So not proud of that, and I no longer do that because I'm super blessed, but I didn't really have a choice back then. So it was really tough. However, the way compound interest works is life is tough. You go through lots of pain, and then you go through, you're a warrior, and then you just have such an easier life, at least financially, right? So that's how finances work. If you invest in yourself and stay on this journey, and I truly mean, don't make stupid mistakes. Don't lose money. Don't go off the deep end starting to buy options, following the news, playing earnings. Make sure that you're using covered calls. Yeah, just make sure that you are focused. Then you can get to $1 million. And then after 1 million, it just becomes really easy. Like you can go to 1.4, 2 million, 2.7, and that's basically the trajectory that I'm currently on. And that's just how compound interest works. So look, please don't cheat yourself. You want to take the integrity route in life. Don't take any shortcuts. Don't cheat. What you want to do is you do not want to aim too high, okay? 35% is already very high for a small portfolio. And then as you go into the future, you are probably not going to be able to even make 35%. Because if you take the difference here, like if I take 56,000 minus the $30,000, you will see that, this is just like $26,000, which a lot of it is just adding. This is basically a reverse mortgage. So if I drag this down, you will see that the returns that I'm making that you can make per year just goes astronomically high as I go into the future. So instead, what I recommend is, yes, you can aim higher at first. I have months all the time that are over 3-4% easily. So let's say this is 48%. And by the way, as you can see, the higher I make it, the more ridiculous the numbers get. And then over a certain period of time, you become richer than anyone in the planet. You'll be richer than Jeff Bezos and Elon Musk if you can continue to compound your wealth by 48%. So don't be naive. You can't do this forever. You have to focus short term to building your portfolio as quickly as possible, of course, but at a certain point, you're not going to be able to do it. So instead, let's just take the return down to 18%, or let's just make it 24%, because that's 2% a month. So let's make it 24%. And let's say that you can no longer make, 48% per year in returns beyond even 667,000. It starts to become, well, no, you could. Beyond 1.5 million, I would say. So let's take this formula right here, and I am going to make it right there. So now I will drag this down, and you will see instead of 96 million, 14 million, which is a lot more reasonable. See how the rate of return went from 48 to 24, and the difference was literally 96 million to 14 million. That's like literally $80 million difference. That is for a reason, because compounding your wealth at 48%, as you can tell, is unrealistic. It's not realistic on forever. But here's realistically what your portfolio could look like. So after 10 years, you could be growing your wealth by $317,000. Obviously, you can take out half of that and live pretty good on $150,000. I make a lot more than that. I am somewhere around this area. So I'm somewhere around here. I'm in my 10th year of investing, but I've been able to save more than $12,000, and I've actually personally started to drop my rate of return quite a bit because I really want to be safe. You can actually play around with this, and you can adjust your risk and return profile. As you will see later on in this video, I'm going to show you how to basically dial up your risk and make a higher return with spreads, or lower your risk and even do in the money covered calls, or like the double dividend strategy. So if you do the double dividend strategy, that's super safe and it's a lot lower in return. So let's just say, well, this was my goal personally. So I wanted to hit maybe 3 mil, and at 3 mil, even if I make 15%. So at $3 million, if I drag this down from 24% to 15%, let's see, yes. So I'm going to drag this down. So yeah, it's a lot more conservative, although now it's a little too conservative. Okay. So I think I'll definitely surpass $7 million in 20 years. Well, that's not 20 years for me, because I'm somewhere around here. So what is that? 6 years? I'll probably surpass that. So now that's a little bit too conservative, but obviously I'm being very conservative. I'm not Mr. Aggressive here. I'm not Mr. Day Trader. I'm not your swing trader. I'm not your Forex trader. I'm not your crypto trader. I am your retirement, safe, passive income investor. I think I have the best channel here on YouTube because I focus on consistency. I'm not promising you the dream. I have a Discord community, but I'm not out of my way trying to sell it because I don't need it. Only if you want to join, it's the first link in the description. You can get voice notes from me. You can get all my trades. You can get access to me from 9 to 5. All market hours. But again, I'm focused on just delivering value. So as you can see here, the income can be quite high, and most people can't even spend this. This is a little bit conservative because I've been making more than these numbers. So this is how you would essentially plan your wealth. And yeah, just shoot me a comment down below. I can share this with you as well.